great finale. Our closing keynote is ahead. The co-founder and CEO of Raisin, the multiple unicorn fintech from Berlin, is here. And ladies and gentlemen, with a big round of applause, welcome Tamaz Georgadze. Welcome. Tamaz. So good to have you here. Do you know, actually, we have a small anniversary together here. You were the closing keynote speaker at our very first conference 5 years ago, first Frankfurt Digital Finance. And we figured it was about time to get you back here, and you accepted our invitation. Thanks very much.
Thank you very much for having me back. And I remember that day, it was at the zoo, I think.
Yes, it was.
With very nice weather and impressive conference, so a reason to come back.
The lions still followed us from the zoo, but now we're in the greenhouse and, well, have a little bigger location. Tamaz, you know what this is?
It's a football table.
A football table, yes.
But not a good one.
And, well, it's not a good one. Well, it's not a gift for you, but come on over here.
Oh, really?
You know what it is? There's a story behind.
Oh, really?
Yes,
okay.
He's starting play.
I think yeah.
Actually, your team said you are the CEO who's still at the football table every time with them. And we figured that was a nice idea. What is the football to you? Is that a game of strategy? Is that team? Is it speed? Is it outplaying competition? What does that mean to you?
Speed and passion. So you can kind of like emotional ups and downs in a very short time. And it's always fun because you can win, you can lose. It's a bit luck, a bit your mental state. So it's fun to play, and doesn't take long.
Some team building in it?
Yeah, definitely. So I think we were like really first office. So I donated my own private football to the company because my girlfriend and wife back then said it doesn't fit well into the apartment. And she was right, so that it still stands in the office.
Oh, okay, since we had that, we thought we would make that as a little surprise for you. You can play later on. Talking about playing, you learned to play chess when you were only 3 years old, I've read. And because of your talent, your coach actually wanted you to become a chess professional at the time, like your uncle. What kind of, well, this game, how did it shape your thinking?
Oh, that's a very deep question. So
just keep it to 5 minutes.
So I think like what's nice about chess is so it's kind of like there is no luck in the game, right? So it's plus there is a bit of like kind of intellectual strength, but also knowledge, because you have to play opening almost by heart to have enough time for the middle game and for the end game. So that it's so you cannot win by just being super smart, but not reading actually the openings and understanding what's happening there. You cannot. So you have to have like multiple strengths in the game to play up. I think comparison to real life is one thing which you learn is think more long term. So the next kind of like turn and next two are not kind of like enough to think through. So you need 5 to 7 to be kind of like on par with. This is one. And the second one is have a plan and follow it. Because people sometimes, even if they are good at have no clear plan where the whole situation is going. So you have to have a feeling for the situation or for the kind of like where this whole party stands, and to have a clear plan where you want to be at the end.
And probably influencing your entrepreneurial career, right? Clear plan?
Very little bit, very little bit. So.
Let's just, I don't know, I think not many people know. You were raised in the Georgian Republic, graduated from high school when you were only 12 years old, is that right?
That's
then studied economics and graduated with only 17 from university with a doctorate degree. And then worked in the office of the Georgian president, Edvard Shevardnadze, for quite some time. And well, then in 1995, you came to Germany on an exchange program with the DAAD, which is the German Academic Exchange. Talking about Shevardnadze, where did that political interest develop?
Yeah, I mean, so like Texas too far away, but Georgia back then was a failed state. So it was kind of like hyperinflation, like no heating, no public infrastructure. So there was nothing interesting to do at the country beyond being at the president's office and seeing kind of like, I don't know, James Baker, Boutros Ghali, and so people come in and out and shaking hands without saying anything. So that was exciting actually for a year, but not more than that. So it's, and it was more administrative job than a political job.
Okay, let's move to political things anyway, because we heard so much about the European integration earlier. If you had to, well, we've heard certainly of the necessity of integrating, and I know you're an active promoter of the European ecosystem. If you had to put away 3 barriers as a commissioner, what would you do?
Yeah. So I think first thing is it's a huge lever and potential in Europe. So we talk about green energy, AI, and so on. All competitive fields needs a lot of investment. Single market doesn't need a lot of investments, actually needs no investment at all. And the potential of it is, economy says for 10 years it's almost up to 1% annual additional growth of GDP. I think I read IFO Institute last year published a study saying 25% reduction in barriers to services union would lead in Europe to 2.4% additional aggregate growth, in Germany 1.8%. So it's a big thing and it doesn't cost us anything. It plays to our strengths. We have a market with 450 million consumers. I'll give you 3 levers. One is kind of like simple, stupid. Second, more complex. Third is the most complex. First, simple, stupid. There are tons of barriers to enter. So like we have to display in some markets effective rate, in some markets nominal rate to the customer. In some markets we can do MTAN confirmation of the contract, some market digital signature. Some markets we have to report to the local anti-money laundering authority, in some markets not. So it's complex to manage, understand, parameterize, and so on and so on. What is the underlying reason? Is the setting is in all markets, the legal system and the regulator understands that if you act even from Germany cross-border, you are still actively entering the market, so you need to comply with all consumer regulation, AML regulation, so everything else, quite a lot. Some things you do not need, some things, a majority of the things you need to comply with. If we flip that and say we all live in Europe, so I trust that the French kind of do it in a proper way, the Germans do it in a proper way. If you are licensed properly in one country, comply to that law, you do not need to comply with 20 plus other laws. That's a very simple instrument, it's a flip, and it really kills a lot of additional efforts we're doing, legal costs, compliance costs, IT costs, development costs, and so on. So just trust our neighbors that the authorities, they are doing a proper job. This is not kind of like whatever, banana republic somewhere, it's a European Union member country. So I think if we flip that and say it's a kind of like passive offering of services, if you offer it across countries, that's an accepted level for the neighbor. The second one is more complex. The second one is one of the things why in our area, investments and savings, the market is not integrated, is actually taxation. Mm-hmm. Because taxation is different in all countries. You have different tax-exempt schemes. Double taxation agreements are all bilateral, so that there is no. This is the most complex to solve, right? And it's national matter, so it's not a European harmonized matter. That's a kind of drill baby drill topic. But if there are people who are like passionate for it, I think that's solvable. And the third one is something which is very specific to banking and finance. And it's a known topic, unpopular unfortunately in Germany to say it, but we need European deposit insurance scheme. And I think in some of the banking grounds you get eggs and rotten tomatoes thrown at you. But this is, we cannot have a single currency without single deposit insurance. It is in FDIC in the US. It is in China, there is one central system. We have one currency, but pretend if we had like, I don't know, 14 different currencies. And that's not sustainable, and it doesn't cost even anything because of the privilege of the deposit insured money, the situation where there is real kind of like money on fire for that portion, those are less probable. So I think, and there is multitude of other instruments, but the potential which we can get out of it it's quite high for a limited effort.
But we need to mention also the unpopular ways of doing things. Let's dig a little bit into the story of Raisin, because you founded in 2012. Raisin, hardly anyone knew how to spell fintech at the time. As a savings marketplace, you actually founded. And if we look back, really, I mean, 2012, that was right behind the financial crisis, then the euro crisis, and actually interest rates were already falling like this. So how did the idea occur to do a savings marketplace? Does not seem the most logic in the world.
Yeah, so I think like I'm a slow person, so it took me a couple of years. So actually the basic idea was born 2008. And 2008 in the financial crisis, I was back then at McKinsey, and one of the topics which actually was super unsexy and not relevant at all was raising deposits until the crisis happened. So, and then I had a lot of work to do with mid-sized banks who all of them wanted retail funding. So I said like, McKinsey is not really the one to kind of like operate those things, so why do not create infrastructure which serves a lot of different banks who have the same need? But it took me 4 years to get myself going, and so actually one of my two co-founders was the impetus saying, if you don't do it, I do it, or like we'd have to do it, so a bit of...
Did the competition make you move?
Yes, so I think I need external push.
But then we had times like of 0 and below 0 interest rates, never negative interest rates.
Sure, so we started kind of like, I think our first product was, I remember it very well, it was 2.9% for 1 year, and that was the highest rate which we offered for the next 7 years. So that went into negative. But the good thing is, I mean, you are kind of like, as a founder, you are on a mission. So you want to make it a success. So you become very innovative what you do to make it successful. So like one thing which we've come up with an idea is to offer actually banks a solution so that they can offload the liquidity which hurts them and bring it to banks which are actually willing to pay at least slightly above 0 to the consumer, so that it levels out in the system, which worked out very well in the negative rate environment, slightly less well in the positive rate environment, right? So you are innovative and try to kind of like bring some additional features around the core product, which we succeeded with, I think, in the negative rate.
Interesting aspects. Tough times make you more innovative. So yeah, I've heard that a lot of times, but very interesting how you say that. Now, the situation today. You have survived all the interest rates jumps, and you're active with more than 400 bank partners, I think. Your product portfolio consists of hundreds of saving products in a number of markets, and also digital wealth management offering. What's the current structure of your product portfolio? Is it still the savings marketplace that's the strongest business, or has that changed?
Yeah, so that's still like core and USP of the platform is the savings marketplace, actually. So we have some solutions, like almost all of them are live only in Germany. So one thing is actually to make it more international. We have a digital wealth product. We have a ETF-based Rurup, so a German pension scheme, which is quite attractive. So if you're not clients yet, you need to open. You can sell a lot of taxes every year, and it's a very low-cost ETF-based. So there is some other products on the platform. Roughly, it's slightly more than, so it's like kind of in the addressable, so in the German B2C market, it's like 15 to 20% of our customers who use those products as well, right? So it's a small portion of the overall pie, but it's increasing, and we think that for a consumer, and we talked about financial literacy, or Michael talked about it, so actually one of the deficits of the allocation or wealth allocation in Germany, it's heavily skewed towards deposits. So you can do two things. One is educate and try to like offer something which is meaningful on the capital market side. The other thing is deposits are at 0% at your kind of like home incumbent bank, which doesn't pay you anything. At least get to 2 or 3% with that. So we try to move both levers in parallel, one a bit faster than the other one.
Let's just look at the European countries where you're active. Spain, France, Austria, Netherlands, Poland, Finland, Ireland, and even the UK. So what are for you, I mean, you mentioned before the difficulties with all these separated markets. What's the learning or out of being active in so many different markets for you as an entrepreneur?
So I think one thing which is striking is how different the markets are in terms of consumer preference. So we have Nordic markets where kind of like share of term deposits is almost zero. Also in the Netherlands, it's very low. Germans love term deposits and plannability, and so our average duration in Germany is 2 years product. In the US, it's almost non-existent, that market. So even CDs are no penalty CDs, you can terminate them anytime. So this is one aspect. So like Germans being conservative and liking kind of stability and predictability. The second one is the tax schemes and tax exemptions influence a lot the structure of the market. So France with Livret A and Assurance Vie, which have a very favorable tax treatment, crowd out actually the free market or the kind of like unincentivized market. So there is a lot of things which you do not see before you enter the market, and we find out later. So some of the markets are very successful. Some of the markets we're still trying to figure out the basics even several years after the entry.
You mentioned the US. One of your competitors, N26, resigned from the US, moved out of the market again. You're still in. I think you went 2020. So what's the success recipe to be successful in the US?
I mean, success, you define success, right? So even if you are very small in a very large market, still it's a big portion of your business. So we're happy in terms of like how big the business is. The market is still huge. So if we so just a number is so we have two sides of the marketplace: banks and consumers. And on the bank side, there are almost 8,000 independent licenses in the U.S. So credit unions, banks, ILCs. So it's a very, very large number of entities whom we can serve and offer business. We're serving just 78 out of 8,000. So the addressable market is just very, very high, very big. The other thing is we have early on hired actually local teams. So currently I think we have only one person who is kind of like transitioning from the European to the US business. Wow. So we try to run everything locally. Customer services in Utah, the management team is in New York. All of them are seasoned US people who have been in that business in the US before. So, and it's like kind of, I think it's meaningful to have local expertise there. And the last thing is kind of setup and incentives. So the team is highly incentivized to make US successful. Mm-hmm.
Raisin is profitable today, and well, let's look a little bit at the funding side. You just recently executed a secondary deal. Existing investors sold shares worth 100 million euros. Chinese tech investor Tencent came in, for example. You are converting from a limited liability company to an SE now. The media is talking about a possible IPO second half of this year. Is that something we can count on? When will it happen and where?
I'm reading the same from the media. Unfortunately, I'm not reading the same on any Slack channel on our side. So I think the rumors are exaggerated. Let me put it that way. So we want, of course, like everyone, to have options for investors to have their positions more liquid. That's very clear. We're doing it through secondaries, so we can continue doing it through secondaries. I think there is some limited supply of people who are like 14 years in the cap table to see some liquidity, and we can satisfy that. I think in terms of the company itself, I would love the company to see further growth and further maturity and so on until we are really in the public remit and on the public markets. So I myself would not actually count with ringing any bell anytime this year.
Well, yeah, as I said before, your life as a founder would probably change as well. But successful company, 2 to 3 billion worth, that's at least reported euros in the media also. What would be, from your perspective, to all the founders who are here today and tomorrow, what would be like an advice you would give them if you want to found, scale, and eventually, sell?
No, I think one is really have a clear vision what you want to build and concentrate on that. I think all the mistakes we made in the last 13 years had to do with defocusing and doing too many things, and still the core thing, because you asked like the core USP and core thing we're doing is still the major growth driver. And you can do left and right and so on, but build like spend 80% of your time on the core USP, what you will. The second is like we had a lot of ups and downs. So you described some. I will add many more. So Silicon Valley Bank crisis in the US. We had bank runs. We had adverse regulatory environment. We had all types of things, and kind of like ability to come back and to distinguish between kind of like where the company is and what is the external interest, because there is a lot of things happening from outside, but you're building a resilient company and something which should with kind of like be stable and be resilient in those crises. And sometimes you take it too personal. So I myself is like kind of, is it my fault or what could I have done better? But at the end, it's like it's normal. It helps all the time, and you need to live with the stress and with the constant crisis situation. And the last thing is never go after valuation. So 2 or 3 billion, I would never comment it. The only thing I can say
said it was reported.
Yes, true. I read the report too.
I read it somewhere.
So I think the only thing we can say, or I can confirm, we never had a down round. So, and I think it's a mistake to go after valuation for a small piece, for something where you get something on like crazy preferential terms for the last piece of shareholding. It hurts everyone. It hurts your mental health, it hurts your employees, it hurts initial investors. So we didn't go down that route, and do not be tempted with a billion valuation at a too early stage. Something is wrong about it. Mm-hmm.
And one last wish, because we have to conclude, for Europe, for scaling fintechs, for our competitiveness in Europe, for the financial industry eventually, what would that be?
I think like, so doom and gloom everywhere, right? So I'm in the same probably news bubble where I will give you an alternative vision. So I agree that our like European banks are not the best banks and the like highest market capitalized, right? But if you think about fintech, Europe is the domicile for the best fintechs in the world. Wise, Klarna, Revolut, Konto, Trade Republic, Raisin, N26, tons of them. Those are great companies. And they are especially great in bringing cross-border business models. And the reason is because Europe is so divided. So why is TransferWise so good? Because it's UK, different currency. They had to solve the problem with euro. It doesn't exist in the US, right? So we are actually quite strong. We have a very, very vibrant fintech ecosystem. And we have to help the ecosystem, because quite often in all discussions, emerging risks and what can go wrong, and like everything can go wrong. Typically not from a fintech, but from a traditional banking sector, which is very large and probably like too large to save in some cases, right? But let's encourage, let's help, let's have a positive mindset attitude. In this sector, we can be world leaders. So Raisin is the largest savings marketplace worldwide, right? Revolut is the largest neobank worldwide. Wise is the largest currency. We have largest companies in the world. They are not in banking, they're maybe not in AI, but in fintech we are something. So my call or appeal is, let's kind of look after the baby and make it really, really big. Mm-hmm.
And it's a positive outlook and an optimistic outlook. Thank you so much for being with us today, Tamaz Georgadze. And we wish you lots of success and hope we can still meet you at the foosball table with your employees in many years when you're even more successful. Thank you for joining again.
Thank you,
Tamaz Georgadze.
Thank you very much.